Hello everyone, welcome back to the channel. I'm recording today's video for a very specific type of viewer. Someone who's looking at the Micron chart and feeling the FOMO, wondering if they should just give in and purchase the stock. I've spent hours on Claude building these varietyful slides that I'm going to go over today, and they will touch both the bear case and the bull case. My goal is to remain as neutral as possible so you can make your own decision, but I do want to give you the very best research to facilitate your decision. And at the end, if you decide that you want to purchase some shares as an added bonus, I will go over the technicals and explain you where to get the best possible entry. I remain neutral on the stock. I'm not touching it personally, but I know a lot of people out there are looking at the stock wondering if they should enter. So this video is for you. With that said, let's jump on with the content. The very first thing I want to do today is go over where the stock was a year ago and where are we today. A year ago, we were at about $125. Today, we're hovering at $1,000, roughly, give and take. Market cap was 140 billion. We have reached $1 trillion plus valuation today. Quarterly revenues went from 9.3 billion to 41.5 billion today, and EPS from 1.91 to 25.11. And the crazy story, for gross margins, we went from 39% to 85%, which is unheard of in this industry, which means they're making 85 cents on every dollar spent. Moving on to the next thing, let's talk about the historical context here. To understand why Micron is known as the cyclical stock, we need to zoom out a little bit over here. So let me walk you through where we were in 2022 and where we are today. In 2022 September, the price was hovering around $48. We hit the peak in June of 2024 of $157. That's more than 3x from the lows. Then we came down to $85 in April 2025. And if I can remember accurately, I think we hit about $65, a little lower than 85. And then since then, the stock has been taking off, and we have hit the highs of roughly $1,200 some dollars a few weeks ago. The reason I wanted to zoom out and show you this is so you understand that Micron is known to 2 or 3x the stock and then get massive pullback. And in this case, they had a 45% flush going into April. What we haven't seen in a long time is a move like this, 700% in 12 months. And that puts us at 240% year to date for 2026. We did recently capture the $1,200 price area and then saw a 23% drawdown. We'll talk more about this later. Let's talk about fundamentals. In Q3 of 2025, we were doing 9.3 billion, moved on to 23.9 billion. Then now we just printed 41.5 billion and we are guiding 50 billion for Q4. So the growth is actually happening. There's real numbers backing that up. So stock is up on legitimate reason, and that is mostly happening because the AI data center broke the memory market. Memory sticks are sold out for all of 2026. RAM is seeing the worst shortage in 15 years of its history, and the prices have spiked 30 to 40% per quarter. So this data does back the bull case here that stock is up on a real reason, and the numbers are backing it up. So there's no need to worry about a massive market crash, right? But we'll move on to the bear case and discuss the other side of it. Let's go to the next part here. The estimated PE for 2026 is sitting at 13x, and the forward PE for 2027 is about 7. And as I mentioned earlier, that they are making 85 cents on a dollar, which is some insane margins on their product. But let me pause here and explain you what a forward PE of 7 really means. Currently, Pfizer at the stock price of about $24 is sitting at roughly 7 to 8 forward PE ratio. And if you look at the stock price, it is down almost 60% from all-time highs. If we go to Meta, in this crash of post-COVID era, we saw a drawdown of 76-77%. And I remember the stock being under $100, and the forward PE at that point was sitting at 8. So when you see forward PE of 8 in these type of companies, you're usually looking at a massive drawdown for a real good reason. But when you look at Micron, the stock is pretty much touching all-time highs. So how could it be at forward PE 7, right? And we'll discuss a little more about that. Let's move on to the next part. Let's discuss how a cycle forms in a stock like MU. Because on this page, I'm going to explain to you how this has happened multiple times before. There are multiple steps that we go through. The first one is there are shortages. We are already seeing shortages because of AI data centers. The second step is prices spike, and then we hit record profits. That's the next step. And we are hovering somewhere between prices spike to record profits. The next thing is everyone starts building fabrication labs. These labs take about 2 to 3 years to create, and they are pouring hundreds of billions into them. So they are very expensive to build. And in 2 to 3 years, you will see that the supply side will start pushing more product. And then in the last step, step number 5, glut and crash. This is where the mismatch of the market comes together. Supply is increasing at a high rate versus demand, which might be decreasing by then. And that is a very bad place to be in for a company like Micron. And I'm not saying that this is exactly what's going to happen today. What I'm talking about is what has happened in this stock historically multiple times before. So let's talk about that as well, right? We have seen a boom and bust cycle during the dot-com time. Then we saw it in the great financial crisis time. Then between 2014 to 16, then we saw the trade war in 2018, and then another bust in during and after COVID era. Now, even though the average of these booms and busts have been about 70% drawdowns from peaks, the one thing observed is that the drawdowns are getting smaller, which is very interesting to see. But at the end of the day, average is still about 70%. Micron has gone through this cycle about at least 5 times before. As we look at this bearish argument, understand that this is just historical data. They're saying, the market is saying that this time is different. This time, the demand is real, AI capex is not slowing down anytime soon, and Micron has these real fundamental drivers that is pushing the stock up, and they will keep up with this demand on the long run. So that is the bull case scenario. So the question isn't really if I should buy the stock or not. The question is this time really different? If I look at the revenue roller coaster for last 5+ years, you can see that since 2018, we have been hovering around 20 to 30 billion, and the revenue has pushed up in a massive way towards upside. In last 8 years, we have not seen revenue go up this high, this fast. And even though this might seem like the historical floor for revenue, when you look at the stock chart, the market is now pricing in 128 billion like as if that is the new floor and it is not the peak. So market is hoping that this continues to go sideways or upwards. Let's talk about margins. For last 8 years, the margins have hovered somewhere between 20 to 50% on this stock. But notice in 2023, we were at negative 9%. Micron was selling chips below its cost, and today we are making 85 cents on every dollar. No memory maker has ever sustained this types of margins before. If pricing normalizes even just a little bit, the 150 EPS estimate evaporates and the 7x forward bargain will evaporate. The one we discussed earlier, the 7 forward PE. And I worked up this pretty nice chart here to show you what happens to the stock if these margins come down to, let's say, 50%. Let's say the margins hover around 50% and we only lose about 35% from the top, right? If margins settle somewhere between 45 to 50%, the stock re-rates itself between $400 to $600. That basically means that if nothing changes and just the margins comes down, we're looking at a stock price of $400 to $600. So we'll see a drawdown like this into this zone. And as a technical trader, I kind of like this because this will retest the previous consolidation level, so works out for everyone. But before we get all doom and gloom, let's say the margins come down to 55 to 60%. The stock price goes between 700 to 950 zone, and we recently, actually last week, tapped into that area. We flushed below, or I think around $900 before we bounced back up. So take a screenshot of the screen, study it, understand it, what is going on. Will the margins be able to sustain 85%? And lastly, in a worst case scenario where margins do come down a lot, we go down all the way and retrace levels of about 150 to 350 zone. And if you are long this stock, that is a scenario you don't want to experience. Now, let's say this time it's not different and we are headed towards a peak and a bust moment. Can we look at historical data and figure out where we might peak? Well, in this case scenario, I think we can get a pretty good guess. In 2018, we peaked at 4x PE at the top. In 2022, we were at 8x. Today, we're sitting at 13x, so we're getting close. And in 2027, we'll be sitting at 7x. The last two times we saw roughly 50% drawdown. So the question is, what comes next for us in 2026 or 2027? Because with cyclical stocks, the cheap is the trap. A low PE on a cyclical stock is often a warning and not a bargain. The multiples always look low at the top on any basis. Cheap only holds if next year's earnings actually show up. So the question again goes back to, is it different this time and will the earnings actually show up? Speaking of earnings showing up, let's talk about the guidance. Why the bulls are not crazy. I think the bulls are not crazy because the management is not guiding for a slowdown at all. Are they corrupt or are they for reals? They're actually guiding for an acceleration, and this time part of the revenue is locked in contracts that customers cannot cancel. I think there are 16 contracts that customers cannot cancel, and if they do, they still have to pay the full amount. We're going from $8 EPS for 2025 to 73, and now for 2027 we're going straight to 150 EPS. Now, if these numbers actually print, then the stock is actually cheap, and whoever enters here will do really, really well. But if they miss and the stock goes back to being the cyclical stock that it is, we're going to see some pretty bad drawdowns. Let's talk about some more good news here and some analyst targets. For next quarter, we got 50 billion revenue guide. Currently, we are at 41.5 billion, and the guide for next quarter will be 50 billion. Management is telling you demand is still accelerating and it is not peaking anytime soon. Sold out and locked in. All memory output is sold out under contract for 2026. Micron has signed 16 non-cancelable strategic customer agreements. As I mentioned before, if the customer walks, they will still have to pay the full amount. And the management has said that they do see the memory market staying tight throughout 2027. And with third-party forecasts say that the RAM supply will be in deficit for all of 2028. And if all of this does happen, the last squeeze might not be in just yet. And if you look at the analyst targets, what is the Wall Street saying? Fair value models are saying that 500 is the right number for the stock, and the highest target on the street are $2,000. And of course, both of them cannot be correct at the same time, so only time will tell what happens. And on the flip side, what could really end this party? As I mentioned before, there is investments of over $500 billion to create these new facilities for more production, and they will be done between 2 to 3 year time frame. So that is coming. The second thing is the demand. It will all reset. All of the demand rests on the AI capex. So if you think we're in a bubble, if you think the capex is going to slow down, then MU's party will end as well. Even a single quarter or 2-quarter pause on that spending could turn this around. Citi recently flagged that domestic Chinese memory chips are gaining international recognition, a future pricing threat at the commodity end that the market is not pricing in right now. Lastly, positioning. I don't think this is a big deal because we already saw a 23% drop here. Smart money is trimming. Hedge funds spend the last 4 weeks net selling chip stocks, including MU. And as I said, the stock dropped 23%. So this is not that big of a deal because this already happened. Next thing is the mean reversion part. As I mentioned, 85% margins are unprecedented. Nobody in memory has ever held margins near this level. If margins come down, pack your bags. The next thing, history. The base case is brutal. 5 prior booms ended at an average of 70% decline. The burden of proof is on. This time is different, not on the skeptics. So you really gotta look at this entire case I presented to you and decide what are your next steps. As I mentioned in the start of the video, I am not interested in buying or selling this stock, but I stared at the chart long enough for you to find you an entry if you decide that this is a stock you do want to purchase. So with that said, let's jump onto the technicals here. Before I show you where to enter the stock, I want to go over this consolidation period. I'm going to draw a line here, I'm going to draw a line here, and I want you to notice something. The way an impulse wave works is that we need to have a liquidity flush, a liquidity event before the stock goes back up again. So the stocks, when they push up at high volume and they continue pushing into price discovery, they eventually find the peak and slowly go sideways. Then all of a sudden one day you see a drop in that stock, and then institutions and buyers come in and the stock keeps pushing forward. This also happened in Nvidia stock, and let me open this up real quick. I remember watching the stock on this drop where we went sideways for quite a while, eventually came down to sweep this level and then pushed back up again. Notice this sideways action that we're going through right now. I can guarantee you that eventually down the road, come back down and revisit the 165 area. We'll come back down under it and most likely do the same exact thing. We will either push up here and then reject for a leg lower, or we will come down here and push back up towards a new all-time high. I don't know what happens, but I do know that eventually we will sweep this level. And I'm mentioning to you so that you understand that there is no hurry to enter MU. We just printed this peak. We have a lot of time before you need to enter the stock. Now you can dollar cost average into it right now, but as I said, there's no hurry because the stock needs to go sideways for a little bit longer. At least I'll give it 5 to 6 months before you need to decide if you should enter the stock or not. Now, if tomorrow the stock breaks out and we continue breaking 1300 and 1400 for some reason, it is what it is. But I'm just helping you find an entry that is a safer zone where you can enter and you know that the stock has consolidated enough and it has gone sideways enough. The stock has proven that it deserves to be in that price range rather than you just scaling into it just because it pulled back 20%. When we were here going sideways, the stock was showing you that I deserve to be in this price range. The people who bought the stock a lot cheaper were exiting, and a new group of people were coming in to purchase the stock. And once that imbalance fixed up, the stock started to make its move back up. So give it some time to consolidate, let the old buyers exit, and in 5 to 6 months, if the stock isn't holding these levels and it's trending down, well, good for you. You just saved yourself a stock that is retracing another 20-30%. But if it does hold this level, wait for an event where it does flush a previous key level and see if it can print some bullish price action from there. See if volume is coming in. We're closing some good bullish daily candles and then even weekly candles. If you look at this candle, this is a pretty nice large wick that shows me that the moments the stock went down, the buyers were there to capture the shares and the stock went back up. So you could have purchased it after this, put a stop under it, or however you like to trade. But I created this channel to make sure that people can find patience within themselves, and I wanted to justify it using the technicals. And I'm telling you, this stock is not ready to push higher. You can easily wait between 4 to 6 months before you have to decide. And another thing I want you to notice is that SPY itself is also pushing towards an all-time high. If we do see another drawdown on SPY with that lines up with maybe October or November midterm flush, which happens during these midterm years, the stocks like MU, Nvidia, and all the other stocks will come down with it, and that will create an opportunity for you to enter the stock if you have decided that fundamentally this company is sound and we will continue to grow. That is the big if. So that decision is up to you. And with that being said, I hope you found value in this video. Please leave a like, subscribe to the channel, and I'll catch you on the next one. Thank you so much for watching.